Today, we are talking about long-term investing and how to use technical charts for your long-term investing. Two very critical points. Fundamental analysis, and I want you to remember this throughout this entire lesson. Fundamental analysis always trumps technical analysis for long-term investors, not for traders. Traders do not care about fundamental analysis. Now, what is fundamental analysis? It's everything I taught you in the first two webinars. So how to read financial statements and then how to research a company, look at the valuation, look at the management, etc., etc. It's understanding the business. Now, with that said, the only thing we control, guys, is we control our entry prices. After that, everything is outside of your control. You're only the price that you enter at and the price that you exit at. Once you have entered or exited a company, once you have entered, there's nothing you can do as an investor. There's nothing you can do. You can't influence the business. You can't go and buy so much from Amazon that it moves the share price. So the only thing you control as a long-term investor or as an investor is the price you pay. So why not add this additional level to your long-term investing strategy that teaches you better to pay the best price? Okay, so that is what I just want you to remember throughout this thing is whatever I say, it never trumps fundamental analysis. Whatever Tesla share price is doing has nothing to do what Elon is telling me is going on in the business. So I separate the two for myself. Fundamental analysis trumps technical analysis every single time. There's not one time I have ever in my long-term strategy used technical analysis when the fundamentals are rubbish. Okay, that is trading. Trading takes advantage of price movement irrespective of fundamental analysis. So remember that throughout our lesson today. So let's start with what is TA? Why do people care so much about this thing called technical analysis? Technical analysis is really just if the technical analysis adds nothing to our fundamental analysis, we just go on our fundamentals because we go on the moat, which means the business, how strong is the company? We go on the financial statements, we go on the valuation, on the PE ratio, the price to sales ratio, on the price to book ratio, and we move on from there. But if technical analysis, especially now in this erratic market that we are in, you guys have been overpaying for companies, and I'm going to show you examples of where TA was screaming at you, do not buy the stock. The price is not right. Even though the fundamentals are right, TA was telling you the price is not right. Okay, so let's go over. What are we going to cover today? We are going to cover quickly. I'm going to show you how to read candlesticks. Okay, then I'm going to show you some drawing tools, because what you will see is you will see a lot of people on social media, you know, putting a chart there, myself included. And then you will see I have drawn these lines and I've drawn these blocks and I've drawn these circles. You're like, what on earth is Sol doing? Or what on earth is Sky doing? Okay. And those are our drawing tools. And they are very simple. I'm going to show you how to use them. And then the last thing that we use are indicators. and I'm going to explain indicators to you in the indicators that I use, okay, and that most long-term investors use. You do not have to be a CA or an accountant or a CFA, member, etc., or business analyst to use these indicators. They are extremely simple, and we are going to keep it simple today. Okay. So what are the purposes of the tools? So I've shown you the tools. What are the purposes of these tools? The first one is to understand the market conditions, because the tools can show you if the market is in an uptrend, if the market is in a downtrend, or if the market is just neither here nor there. Like nobody knows, it's moving sideways. It's just moving sideways. No, nothing is happening. And then if the market is in a way upward trend or downward trend, this is what the tools tell you. Fundamentals can't tell you this. And looking at just the share price on, let's say, Google or Yahoo Finance is not going to tell you, because you need to use your tools in combination to come to a conclusion of where the market is at. So it might feel to you like now, let's use Renogen as an example. It might feel to you like now, like let's say me, I bought Renogen, I started buying at around 15, 16 Rand. It went all the way up to 43 Rand, and then it came down to like 30 something. And now it's like playing, it's like neither here nor there. It's like, do I buy at 27? Do I buy at 29? Do I wait for 30? Is it going to go back to 15? The fundamental analysis of Renogen, if you understand the company and that the company has recently moved from being a exploration company to being a producer, they've switched the gas on. So always in the back of my head, I have my fundamental analysis. And I'm like, but Renogen has moved from being a explorer to a producer, yet the market, the price is neither here nor there. I come to my chart and I'm like, what's happening with the price? Where do I enter? The chart will tell us the market condition. What it also helps you is to determine the areas of value. And this is the most important thing, is there are areas on a chart that screams at you. Okay, we call them support and resistance, supply and demand. Okay, they shout at you. Also, one of our indicators, which is the relative strength index, it shouts at you where the areas of value are. And remember, to get value, I always tell you guys, and I said it in both of my previous webinars, price is what you pay, value is what you get. We want value. So we can only control what we pay, but we need to determine where are the areas of value. And the chart will tell you that. The next thing is triggers. So a lot of people do not know when to enter. They're like, I found this amazing company. Let's say you found Tesla when Tesla was before the stock split, when Tesla was at $1,200 a share. Now, let's say you found Tesla at that point in time, and you like, this is an amazing company, the fundamentals are awesome. Let me go check the chart. The chart would have, you wouldn't have touched Tesla at 1,200 if you came to the chart. You would have been like, okay, the chart is telling me to wait. Even though I am going to go in, I'm going to put my money there in Think Markets. I'm going to put my money there in Easy Equities. I'm going to put my money there in FNB or wherever you're trading, Standard Bank. You put your money there and you're like, Tesla is an amazing company, but over my dead body, am I paying 1,200 because the chart is telling me not to. But you are going to buy Tesla because you are going to be patient, because guess what? The price will come down to where it is a fair price. And I'm going to show you. It is as clear as daylight. Then what I'm going to say is the tools help you to combine the tools for maximum benefit. So we are long-term investors. We're going to learn how to use the tools to create generational wealth and how to combine them, how to combine the candlesticks with the drawing tools and the indicators to just tell us yes, no. All you need to understand is how to read a candle. And we're going to read quite a few candles today. You're going to get bored of me. Okay. So green is good, red is bad. But it's only, when I say good and bad, I only mean up and down. Okay. Long-term investors always wants the price to go up. Traders doesn't care if it goes up or down. They make money either way. They will bet on a stock going down. That is called going short. Or if you are like us and you are a long-term investor, you bet on the stock going up. Now, if the body, now the colors, you can change the colors on TradingView. If you like your up to be red and your down to be blue, which is the Chinese way of doing things, they call it hot and cold. So if a stock is hot, they will make this one red and that one blue, okay? So that's why you see those funny emojis on, on Twitter and you're like, this doesn't make sense. Why is the up red? It's because it's the Chinese way of doing things. But in our world, green is up. Okay, so the only thing is you must remember this is the body, okay, of a candlestick. These two shooting points, these two lines that you see shoot out, we call them wicks. Okay, so the body of a candle that is going up, a bullish candle. Remember, a bull horns up, which means we're going up. We are bullish. We always want to be bullish on the things in the long term. Otherwise, we don't invest in it, okay? It will always start with the opening price for the day, okay? And the closing price for the day. Or remember, candlesticks can be for a minute, a second, a week, a month, a year, 4 hourly, week. A candlestick, I'm going to show you the time and which time frames long-term investors use. We never go into minutes and seconds, okay? We trade in days because we are long-term investors. We are never going to use 15 minutes, 30 minutes, and an hour to go long-term. So it's the opening price. 99% of the time, we use weekly and daily. That's it, okay? For long-term investors. So we're going to talk daily. When I talk candles today, I'm talking daily. The opening price for the day, the closing price for the day. But now remember, during the day, that stock can go lower than the opening price. So this is the lowest price for the day, but it's not where the stock closed or opened, okay? This is the highest price for the day, but that's not where the stock closed. The stock closed here. So opening price, closing price, highest price for the day, lowest price for the day. The body, the wicks. That's it. On the flip side, remember now, your closing price must be lower than your opening price to have a red candle. It's the only way to have a red candle is the closing price must be below the opening price. So there you have the opening price for the day, the closing price for the day, lowest price for the day, highest price for the day. So the price went lower that day, but it didn't close at the lowest price for the day. It closed over there. Okay, so that's all a candlestick is. So when you open a chart and you're like, oh my gosh, these things are crazy, we are going to practice. Okay, now the next thing is our drawing tools. And this is where I need you to pay very close attention. Okay, I have to ask you to pay attention. This video is going to be on YouTube, so you're going to have to watch it a few times if you are a super beginner. We're going to talk about trend lines because trends tell you people's behavior. Like, where do people keep on making decisions? Okay. The next one is support and resistance. I have a slide on support and resistance. It's critical decision areas where most traders and investors make their decisions. So you should be able to spot support, to draw it actually on a chart. Okay, supply and demand is very similar to support and resistance. I'm going to show you what the difference is. The one is a line, the other one is an area. Then I want you to, and this I added very reluctantly because this is something traders use, called manipulation. I'm not going to go into much detail today about it. I have a full trading course coming out next year that I'm actually busy recording, but I'm also going to do live lessons and one-on-ones. But manipulation is so important that I thought, let me chuck it in here just to put it on your radar, that you need to be able to spot manipulation on a chart. And what is manipulation? We're going to get there. Okay. So what are trend lines? Trend lines, and this is now where I'm going to start jumping between trading view and the slides, because it's going to make more sense than me just projecting a slide. Okay. A trend line is a line drawn on a chart to show a trend. Are very important. If you are in Discovery or Renogen or even Purple Group right now, you must feel in limbo. And the thing is, why you are feeling in limbo is because we are in a consolidation phase. It's going neither here nor there. It's going just between these two. It's not going, it goes there and then it hops. It's almost like it's hopping. It's hopping. And that's why you're feeling like, when do I make a decision? There's going to be a clear sign. And that's why I put this thing on here, because I want you to at least know that you are not trading against Sol. You are not trading against your other fin Twitters people, okay, or TikTokers. You are trading against Wall Street. You are trading against RMB. You are trading against huge players in the market. And where the big money is, that's where they manipulate the market. And if you can spot on a chart where they manipulate the market, I put out a tweet the other day on Purple Group, and I said I was waiting for them to go there, because that's the last time they manipulated the market, was at that price. So I knew they were going to go back there, because they have to fetch their money, because that's where they are playing. Their money is there, the large players. Traders do not trade against other traders. Traders trade against institutions. And do not think you will ever beat an institution at their game if you cannot read a chart. Because they're not going to tell you in the news, hey guys, we're doing this, we're doing that. What they're doing is on the charts. That's the only place you can spot where they are manipulating the market. And that's why I'm waiting for Purple Group to go to 150, because that's where their money is. They have to go fetch their money, because that's where they last traded. They're letting all the fools do all the other things. Okay? They're waiting. They are going to go back there, because guess what? The market doesn't move without large amounts of money. You and me can't move the share price. We cannot. As much as we feel we are invincible and we are now have 1,000 Purple Group shares, you cannot move the price. Institutions move the price. So we need to know what institutions are doing in order to, and that's why I chucked it in here. It's really for traders, but I want my long-term investors to spot it on a chart and be like, you guys are being very sneaky. So I'm not going to buy Purple Group at 3 Rand. Because you fools, actually, your money is at 1 Rand 80, 1 Rand 70, 1 Rand 50. If you like Sol, you stretch it. I'll show you how to draw a whole area, okay? So that's trend lines, okay? Trend lines can be used for stocks. A lot of people think we only use trends for crypto and forex. Trust me, The forex market is the largest market on the planet. Okay, I think about 6 trillion or something changes hands, dollars, every single day in the forex market. The equity market and the crypto market doesn't come close. Can you guys see why forex is such a breeding ground for scammers? It is the largest market on the planet, and that's why scammers play there. Because why do you want to play with equities? You know, they also like crypto because it's unregulated, and also because they thrive on you not knowing what you're doing. So you don't understand crypto, so the scammers will, you know, try to trade for you, etc., etc. They feed on that you don't know crypto or forex. Forex is the largest, so they can steal the most amount of money there. Crypto, they're going in on you not knowing, you know, the crypto space. It's new, it's unregulated, etc. So they feed off that. The equity market is what we are focusing on today as long-term investors. I mean, crypto is a part of my long-term strategy, but today we're going to focus on equities. Okay. Then let's talk about support and resistance. And that is why I said I'm now going to move over to TradingView, and I'm going to show you. But I first want to explain support and resistance to you. Support and resistance, they are areas where larger players consistently make decisions to buy or sell. The price consistently hits that line. It's a line, okay? It's not a block, it's not a circle, it's a line. And it's either a horizontal line or it's a diagonal line, okay? Most of the time, you're going to draw a horizontal and diagonal line at the same, not at the same time, but you can draw it on the same chart. Now, this is where they make decisions to buy and sell. They consistently make it, and you can mark them clearly on a chart. Now, why would you go against, you go and make a decision when the market is neither here nor there? Okay. I'll show you an example quickly. Let's see if I can get out of here and I can get into my trading view. Okay. Let's go to a stock that I've put it in here for lessons. Let's go to Discovery. So I have Discovery, I have Purple Group, I have Renogen here today, I have Alibaba, and I have Tesla. I hope I cover as much as, you know, like, I hope I can help you, because I try to choose different types of companies. Okay. Now, the first thing when you come in here is you're going to be like, so what the hell is going on the screen? How the hell do you get your screen to look like this? Because yours is not going to look like this when you get in here. The first thing I need to do is I need to remove my indicators. Okay. I need to remove my indicators because we are not there yet. Okay. I'm also going to ask you, please, I'm not going to delete. I can delete it, but I don't want to. Please ignore this area up here. You know what? I'm actually going to delete it. I'll put it back in. So when you open your trading view for the very first time, let's start with Discovery. Okay. When you open it, it's going to look like this. Okay. The first thing is, I know I'm old, so, but I do like dark mode. So a lot of people don't like dark mode. But if you want to put it on dark mode, just click on, if you haven't uploaded your own picture, you can, there will be like a little girl or boy there, and you can put it over to dark mode if that's what you prefer. I'm going to do it in light mode today because most beginners prefer light mode. Okay. So this is when you get into trading view and you say, and you basically just, you can put any companies. If you click on Discovery there and you want to change it to any other company's name. I mean, let's say if we say Kumba Iron Ore. Okay. So there's Kumba Iron Ore. You must look for the one on the JSE, the one with our flag. Okay. If you click on it, it's going to change this chart to Kumba Iron Ore. We don't want to look at Kumba. We want to look at Discovery. I'm just showing you that. Now, let me show you. On this side, where your face is and down, All of those are drawing tools. And it's what we're going to talk about now. We're talking about drawing tools. We're talking about trend lines, support and resistance, and supply and demand. Engulfing is not a drawing. Engulfing is a candle. Okay. I'm going to show you how to spot an engulfing candle and what does it mean, because engulfing is manipulation. Okay. That's exactly what it is. So on this side, down is your drawing tools. Now you will see I have a little block up here. What I've done is you go in there. So let me just, if you click on this arrow next to it, okay, you can decide what are your favorites. If you want an arrow, a whatever. So I always need a horizontal line and I always need a diagonal line, okay, an info line, or you can choose a trend line or whatever. Then you will see it adds it in there. So there's a diagonal line, there's a horizontal line. You can see it says trend line, horizontal line. Okay, so it has put it as my favorite, so I don't always have to go back there. So the other thing that I use is I use a rectangle. So anything down here, you can see, I'm going to show you how many drawing tools there are. If you go down here, look at all these lines. Okay, these are just lines. Then you get to the next part. These are Fibonacci tools. These are for the, if you ever hear people talking about pitchforks and fib channels and stuff like that, those are the CFA gurus, okay, that did CFA. I don't use those. Those are for traders. Then you can see here are some drawing tools. I always like my rectangle, and sometimes you can see here, I like to use the ellipse, you know, just to draw something if an area is very important to me. So you can see I've just clicked on, if on anything here, if you want the highlighter to be up there, put it as your favorite, then you can highlight on your chart. Can you see? So those are, let me just control Z. Then if you want to write on your chart, you can also do that. You can see I've already said I want text and I want a call out, so that if I put, let's say I do a call out and I do that, and I say at that point I want to say reversal pattern NB, take note, you know, and then I put it there and then I keep it on my chart. Okay, so that is the reversal pattern that I just want noted over there. Okay, you can point it to wherever you want it to be. You can move it if it's in your way, blah, blah, blah. So on this side, guys, drawing tools, anything that you need and you want to add it to your favorites, add it there so that you never have to worry about it again. Okay, you can also just go there and say hide if it's in your way. That's the first thing. Now you will see me moving the chart along. So on here, drawing tools. Up here, very important. Let me take this out of your way. 5 minute, 15 minute, 1 hour, 4 hour, daily, weekly, monthly drop down. How did I get those times in there? I have put them as my favorites. Okay, so I can remove the 5 minute, I can remove the 15 minute, I can remove the 1 hour, I can go down. I want to keep the 4 hours, the daily, the 1 week, and I can even remove the 4 hours. So in days, we do a month, a week, a day, a month, and a week and a month. Okay, so that is how you get them up there. Now the next thing is candles. You can decide how you want your candles to look. Now, I just want you to know, if you have a mouse, okay, you can see these candles are very tight right now on top of each other. Move your mouse up. It makes the candles bigger. Roll it. If there's a scrolling thing on it, roll your mouse up. It will make the candles more visible. If you want them tighter, pull it back to you, your mouse. Okay? If your price, so let's go out again. If your price goes, if it looks like this, let me do that. If it looks like this, and you can't see, okay, you can't see on Trading View, all you do is, so this over here is time, this is price, okay, like we learned in school, time and price. If you want it to come, if you want to make it smaller, you want to make this smaller, stand anywhere on the price and hold your mouse in and drag it down. Okay, drag it down. Now everything is on. Now this makes no sense to have something look like this. You do the very same thing. You stand on it and you drag it up and you say make it bigger. So down, make it smaller, up, make it bigger, so that you are not frustrated on your charts. So what did I do now? I moved my mouse away from me. I'm pulling my mouse towards me. I'm rolling it, scrolling towards and away. Okay, so that is how you navigate the months. So let's say let's go to the weekly, then we'll see more of discovery. I'm pulling the price down. I'm rolling the mouse towards me, and I can see discovery from 20 something. Okay, look. So now what does this mean? Every candle that I see here is a week, because I'm on the weekly. Every candle is a week. So you can see here 5 September. The next one is 12. So there's 7 days between this candle and that candle. So you need to be very careful. Are you on the daily? Are you on the weekly? Are you on the monthly? If you are a trader, you are going to use the weekly to start and the daily to make your decision. That's it. You cannot make a decision on the weekly. So the weekly is going to be where you draw your trend. If you can't see a clear trend on the weekly, you go to the daily and you draw your trend there and you make your decision. But your decision is always going to be on the daily. It's never going to be on the weekly or the monthly. That's not where we make decisions. Okay? So I'm just drawing that up. I am going to the weekly on discovery. And now I'm going to draw it a little bit closer. And I'm going to ask, I am going to draw a trend line. The first thing I can see clearly on this chart, remember, we are on support and resistance. I said it's a horizontal or diagonal line. Okay, let's go. It is where the price consistently turns. It just, when it gets there, it gets rejected. So think of support is your floor. Every time it gets to the floor, it bounces up. It's like have a tennis ball in your hand. Support is every time it gets there, it jumps. Resistance is the ceiling. Every time the tennis ball gets there, it goes down. That's your price. It does the same thing. Okay. So on this chart, if we start, let's go back. Let's say 2060. Okay. If you look at a chart, I always want you to, I tell my students, do this. Look at where the current price is. Okay. You are on the weekly. We haven't added any indicators yet. Okay. I'm not there. I'm only on trends right now. So I'm not using moving averages. I'm not using the RSI. I'm using nothing but lines right now. If I decide to draw a line, do I start on this side or do I start on this side? That's what a lot of people struggle with, okay? I'm going to say what works for me. I love using 5 to 6 years data of any stock. After knowing the fundamentals, you can't use 5-year data for Tesla. That was at $3 the other day, and now it's at $900. 5-year data is not going to help you. So knowing the fundamentals will help you. Discovery is an older business, which means there is data. The stock price has had various movements. If we go back, you know, if I bring this, I'm holding my mouse in, I'm coming down, okay? Going back to 2020, this is really not going to help me here on discovery. The current price is too far away from the year 2008. So it really becomes irrelevant. I would literally, I'm taking my mouse, I'm drawing up, okay? So I would literally say, let's say 2015, 2016 on Discovery. Let's make it a bit more clear. Let's do it there. Is there a price on this chart where it consistently bounces? If it gets there, the tennis ball goes up. Can we see one? I am almost. Look at how many times it bounced off that line. When it gets there, it gets rejected at that line. In 2016, it got rejected, okay? Every time it gets to that line, it bounces. And then it went all the way up. It comes there. The wicks went through it, but the closing prices, it got rejected. There, we know this was COVID, okay? We know this was COVID. So you have to also be able to, and that is why I have this on my chart. I'm like, so please ignore that. It's COVID. That's what I will make a note for myself. Discovery, COVID, it's not going to help me in my decision making. Look here, if I ignore that, it came there again. And remember, this is not a perfect science. It gets there, it gets rejected again. It got rejected in 2016, again, 2016, that's 2016, and almost 2017. The same thing happened in August of 2019. It did that again in November 2020. It didn't get there in 2021. Look where it is now. What do you think is going to happen to this price where it is now? This is how I make a decision, is this is an area I am very interested in. How can it go lower? Yes, it can. But it consistently bounces off that bloody line. It has now even broken through the line. Here it broke through the line, but it went up again. So if you combine your knowledge of Discovery with this trend line, because no, you had no business buying Discovery here, okay? Let's look if there's another trend line. If we look at this one, I'm looking at this one here. If I take a recent one, if I want to see, does the price do anything there? Not really, hey? Price doesn't really react on this. You can see there's a massive thing that happened here, a massive upswing that happened here on the weekly, but it's never happened before. So that's not an area where the major players are playing. The major players want to be here. This is where their money is. So I would delete that line. I'll say, no, this is not. It is not. Resistance. So I've shown you a support line, a resistance line. Let's look here. Okay, there's something in the chat. Thanks, Jane. Okay, resistance line. I just drew it from the latest, and I'm now going to check, does the price consistently get rejected at this line? Now look at it. It got rejected. So it bounced down at 180, and it went down. The previous time it did that was in 2018. It got there and it went down. Before that, heavy manipulation. When I look at this, it is screaming manipulation. I'm going to show you guys how I know they were manipulating the market so bad, because they were pretending to do something and immediately did something else. Immediately they did something else. So that is why you will see these manipulation areas. Okay. Now I am, so the two things that you must remember is you can get internal, we call it internal and external trend lines. Okay. So when you start trading, when you start using technical analysis, let me not say trading. When you start, it's very common. I see it with a lot of my students, is they only able to spot the external ones. Because can you see that is external? It is external, means at the extremes of it. Okay. It starts getting very hard to see it when it's happening inside. Okay. So let's look at this line. I just want to make it another color. Okay. I'm going to make it another color. If you ever want to change something's color, because let's say you want to make support green and resistance red, etc., etc., you just right click on a line on anything, okay, on the chart. I'm going to show you a few times. Settings, and you say, can you please make this? I'm now teaching something else. I please want them to look at it in blue. Okay, let's use blue. I want them to see a blue line. Okay, and then I say, okay. So now let's look at this blue line. I drew this blue line because can you see it's internal. It's you have to, guys, this you have to practice, because you need to be able to make money and make decisions inside of the extremes, because you can't sit on your money from year to year when it bounces again, because it means you'll do nothing from October 2020 to September 2022. So take it slow, okay? Take it slow. Now we are going to talk about internal trend lines in between those, because I started with the max and the lower, okay? From what we can see on the screen. Now let's go internal. Is this a support or a resistance line? The price got here, it went down. There, nothing happens. The price got there, it went up, it went down. Okay, here the price got there, it went down. The price got there, it went down. The price got there, it went down. So I'm going to tell you, let's do it. There, it went down. There, it went down. There, it went down. There, it went down. Every time I touch that line. Now tell me, is that not a strong signal that that line is where price gets rejected? When it gets there, price goes down. Not always. Remember, we work on probabilities. Okay. So there was a lot of traders who used that and that and that, and they got here. And what did they do? They sold Discovery based off this. They sold Discovery there. Why? Because they are traders. Okay, what are they saying? They're saying to themselves in their heads, if I sell Discovery here, because remember, selling works. I'm teaching now a little bit trading too, because you have to understand how a trader's mind works. Traders, basically, they will sell here and then they buy Discovery back at the support line. They sold it there. So let's say a trader sold Discovery at 135, because that's the resistance, that's the ceiling. They were like, so you fools, every time you get there, you sell this, you go down. So I'm going to sell Discovery here. So they sell it at 135. Because in trading, you can sell something you don't own. It's called going short. Guess what they're doing now? They're buying Discovery. The difference is their profit, because they have the opposite mindset of a long-term investor. Somebody that goes short has exactly the opposite mindset. So again, let's look at that one. Price got rejected there, price got rejected there. If you now draw that trend line and price gets there first, gets rejected. If price breaks through that, let's move. If you want to move your chart, just drag it, okay? Because you need to go into the future. This is where you play on a chart. So now what this thing is telling me is Discovery is at a place where it consistently turns and goes up. It's right there, right now. It's at a place where it has turned 4 or 5 times in the future and went up. It's right there, right now. But if it gets here, chances are it's getting rejected because it's been rejected 5 times at that point, because this is where the large players are. But what if it breaks through? Because the other thing that, why can I not see it on my chart? There's something that I need. Ooh. Okay, it's fine. I'll file. I just want to see something. Okay, no. Okay, so the other thing is, remember, we know the companies. We know when earnings are coming out. We know what's happening with Discovery and the investments in China and the Discovery Bank, blah, blah, blah. So you never put all your money in as a long-term investor. And this is why I am such an advocate for DCA, is now you know there's a potential. So you buy there, you know there's a potential it could get rejected there. Why would you put all your money in here? Because it could even go lower if you know the business. Okay, so I'm not going to draw 1,000 trend lines on one chart. I want us to practice on a few different charts. So you start with your outer support and resistance, and then try to, at your best possible, on as many charts. TradingView does not limit you. If you want to draw on 600 charts, do it. But practice how to spot support and resistance. Resistance is the ceiling where price gets rejected and it goes down. Support is where buyers buy. Okay, now let's go back to our slide. We're going to constantly go back to the chart. Don't worry about that. So support is the floor, resistance is the ceiling. I told you that. Okay, now you will hear traders also, and a lot of people, and this is what I want you to understand, is people will say, oh, supply and demand areas. Remember now, oh, the one thing I didn't show you guys is, but I will show it to you on another chart, is drawing a diagonal line. Sorry. I am over eager here. It's drawing a diagonal line. Okay, I will show it to you on another chart. Is where the price. So if you're drawing a diagonal line this way, let me teach it now. Okay, but I'm going to show you examples on another chart too. If you're drawing a diagonal line, you are up, you are drawing support. Okay, it's this line, but at an angle. Okay, now what this is telling me is, yes, I'm using COVID. It's just an example. Okay, we'll do it on another chart too. I can draw another line. I can see, and always draw your line. Your line, sorry guys, I just needed to stop. Your line must always go into your decision area on the side. Okay, if your line stops, you're not going to know what to do in 2023. Okay, so this is a resistance line. Look at what happens to this. Look at what happens on this diagonal line. Every time price gets there, it gets rejected. Not even at a horizontal level, at a diagonal level. Every time price gets there, it gets rejected. Can you see? But yeah, after COVID, it broke through. Okay, so you need to be able to draw support and resistance at a diagonal, at a horizontal level, and at a diagonal level. Okay, you're going to have to watch this video again. I'm going to give the super users in here a tip. The strongest support and resistance line is where you drew your horizontal and you drew your diagonal. Sorry guys about that. And where they meet each other. That is such a strong price, because it means people who make decisions on this line and people who make decisions on this line at that price, they agree. Because remember, not everybody is in the market at all the time. We call this area, Sorry, I make that. We call that confluence. That's the strongest price where price is going to hold. It's the strongest level where price is going to hold because there are a lot of players who make decisions at that level, and we call it confluence. But I'm not speaking about confluence today. I'm moving on. Ignore that. I just gave it to, there might be some people here who need a tip trick or something like that. So where you see two support lines meet each other, you are like, hi guys, this is where the decision makers are making their decision. So based on my other technical indicators, I'm going to see what they are doing. Okay, so that is called confluence. If you ever want to if you want to Google it or something, or you want to go onto YouTube and learn more about it, it's quite a strong indicator. Okay, so people often I do check the chat. Hey, no problem, Amashli and Eldrich. You guys are welcome to always also contact me if after this and we need more, we need to go a bit deeper. But supply and demand, I want you guys to be able to, I think there's 40 people or so here. You know what I want? I don't want you to be perfect after one webinar. I want you to watch it again. I want you to practice. Open the free TradingView account. There's a feature on TradingView like this. Let me show you. Can you see I'm on the chart now? Can you see there's a little camera here on the side? Take a snapshot. You can literally say save chart image. If I open it, just see what it looks like. Can you see there? It has my username there, RoshW23 Discovery. Nothing stops you from, so I practiced. This is how I drew my lines. Send me the screenshot. Email me the screenshot. And I will be like, why do you think that is a support line? Why do you think that's a strong area? What decision are you going to make here? Are you buying? Are you selling? And you can literally also go onto the chart and you can literally just, if you want to tell me, and then you just basically say it there, I want to buy here. And then make a question mark so that I know this is where you want to buy. And then it's okay. Then take a picture of it, save it. There I open it. Then I can see you want to buy here. And then I'm going to say, based on the chart, you're making the right decision. I wouldn't say go all in, because I also know what's happening in Discovery at the moment. I would say the chart is saying it's the right price, the valuation is right, but this is the news from the company. Are you still comfortable? Okay, that's how we combine fundamental analysis with technical analysis. It's not just the chart. So use that function. You can choose, you can save your charts, you can send it to me, you can say, I practice support and resistance. Please check me. Okay, that is anytime. I will make time. Then, I want you to hold yourself in a conversation with traders. Is when people talk about supply and demand, support and resistance, for the people that are in the room, I just want you to be able to feel comfortable. It's the same thing, guys, that I did with my cryptocurrency ebook. Is I literally said, I want you guys to feel comfortable holding your own in a crypto conversation. When people talk about DeFi and people talk about smart contracts and people talk about dev teams and people talk about Satoshis, etc., you can hold yourself, and that is how you grow and how you learn. Because once people talk about supply and demand or support and resistance, and you just, like step back and you don't ask questions. And I mean, you can ask simple questions like, if somebody draws a demand area, demand is really support. Demand is just an area where support is a line, okay? Supply, so demand is where buyers buy. So think of it, there's a demand for the shares. And where's there a demand for the shares? At support, because that's where we buy. So it's the same thing. The only difference is, let me put my laser pointer, the only difference on the chart is how you draw them. So when people talk, so if you understand from what I taught you now, what support is and what resistance is, that support is the floor and resistance is the ceiling. So sellers are going to sell there because it's high, buyers are going to buy here because it's low. Then you know what supply and demand is. It's only how you draw them on the chart that is a little bit different. Instead of being a line, it's a block. Okay, it's an area instead of just a line. Okay, I'm going to show you how to draw it, but I first want to touch on we don't have a lot of slides. I promise. Okay, manipulation. Manipulation, as I said earlier, is when the markets pretend to be doing something and immediately after that, they go and do something else. They manipulated you into doing something. Okay, how do you spot manipulation? The only way is through engulfing. Guys, the large players in the market show their hand on the charts. Okay, and I need you guys to practice this, send it to me. Okay, tweet it, tag me, DM me, I don't care, but practice spotting this on a chart. Engulfing is when you have a candle, okay, and the next candle is an opposite candle, but it is so big that you know what engulfs means. It swallows this one. That's what engulfing means. This candle, so if you were standing here, and let's ignore that. If you were standing here, you can't see the red candle. That's engulfing. And this must be a green candle, okay? If this is a red candle. The same year, the market pretended to go down. Can you see? The market pretended to go down. And immediately there is a massive green candle after that. And the candle is so big that you can't see the candle before it. They showed you their hand for free, what they are busy doing. This is a bullish sign. This is a sign that they are about to go up. That's manipulation. Okay. They pretend to do something and immediately do something else. Same thing here. They pretended to go down, to go up. Immediately there's a candle so big that if you were standing here, you can't see the green candle because the red candle is so huge. Guys, this is manipulation. I can talk about manipulation for 3 hours. But I just wanted to show you the basics of manipulation. This is only a 2-hour lesson, so I cannot talk about manipulation for 3 hours, but I promise you I can. It is where the market shows you their hand. I'm going to show you a few examples on the charts, okay? So let's quickly go to supply and no, I'm going to show you, Alan, I'm going to show you examples. I'm going to show you examples of engulfing. Okay, let's go to the chart. Let's go to the chart. Okay, do you guys want to go to another chart because this one is too dirty? I'll go to another chart. Okay, so sometimes you can look at it on the weekly or the daily. Okay, it is totally up to you. You are 99.9% of the time going to come to the same conclusion. When I say you can spot it a mile away, you guys are spotting it right now. What is this? What is this? What is this candle here? This red candle here. It is so huge. It is so big that if you were standing here, over here, you can't see that green candle. You can't. That is manipulation. They pretended to be going up. And when I say they, I mean institutions. They pretended to be going up. Why? Because they wanted us to buy. And what did they do immediately after? They made us buy and they sold. They bought, yeah. They basically went short. So, guys, you have to be able to spot this on a chart, okay? And the other thing that you do is, let me go to the weekly because we are on PPE now. I'm standing on the 360. I'm drawing my chart down, okay? I'm just going to delete, don't delete that, it's fine. Control Z. Okay, I'm just drawing it down so that I have more price action. The weekly on, sorry guys, I need to just stop this thing here. Okay. So this is the weekly for Purple Group. So now a lot of people understand this company. That's the thing. A lot of people use it. A lot of people understand it. Okay. If you look at the weekly, I very seldom go to the monthly. It just gets so frustrating. So now you guys know a lot of people who bought Purple Group. You know, we were all lockdown babies. And during lockdown, we were so bored. And then we were buying Purple Group because we were sitting in the house here. And Purple Group was like 50 cents and something. And people kept buying. Okay. And they pushed the price up all the way to, what is the max price that we had there? Probably 3 Rand 60 or something like that, 3 Rand 50. Now, if you look at this chart and you are on the weekly, do you spot manipulation on this chart? On the weekly, okay. If I look at the weekly, and I'm going to tell you what to do with the manipulation, okay, is, sorry guys, I just need, it's fine. I'm looking for nonsense. Okay, so sometimes your manipulation candle is hidden. It's sometimes painfully obvious, and sometimes it's hidden. It could be 2 candles. They pretended. So let's not look at the latest. I'm going to go here. We are on the weekly. So if you're on the weekly, it's nice to go. But look at how the market went up here. The other thing I want you guys to understand is that 20, and it's really, really hard. And I feel for people who got into the market in 2021, 2020. People who are getting into the market for the first time in 2022, you guys are the luckiest people on earth because you are getting the best prices. Okay? So you are really getting the best prices. But I have to be here for people who got in 2020 and 2021, who are currently seeing losses and who needs to get in at the best prices. Okay? For them to average down so that they can spot these things. I want you to look at Purple Group. Now, I said 2020, I literally ignored COVID a little bit. I started in 2021 and I was like, what did the share do in 2021? Okay, because 2021, I want you to know, people were bored. 2020 and 2021. People were jumping onto bandwagons. There was a lot of FOMO. Okay. And when I add the indicators, you guys are going to tell me there's no ways I would have bought the share at even 3 Rand or something like that, because the indicators would have been screaming at you. But let's just look at manipulation. These guys, let's start here. Okay. You pretend to go up, you go down. Then you pretend to go down. Okay, so there you go down. This candle is so huge. It engulfs the candle before it. Okay, then there's a little bit of sideways movements, really no decision, and then the market goes up. There they, for a whole week, went down. This was a candle that I drew. I was like, these guys are fooling us over here. That was the first one that I drew. The second one that I drew was, I was like, these 4 candles engulfs those red candles so bad. I'm going to draw that area. And I'm going to tell you now how I draw it. You draw the whole pretending candle. I'm not going to use fancy language. The candle, the last candle where they pretended to do something and then immediately did the opposite after that, you draw that candle like a rectangle. Because the chances are this is where they are manipulated. This is a manipulation area because you can't get an exact price. So you need to know which area are these fools playing in. And that is why I drew this and I was like, they're coming for their money. Look here at Purple Group on the 3rd of October. And just so that people know, this is just for information. I said, but it's to show you how sneaky they are. This is a doji, this candle. Its name is a doji. It's an indecision candle. It means if you see that candle, do nothing. That candle tells you nothing. So you do nothing on a doji. That's what it means. So can you see how sneaky they are? They almost came for their money. They almost got there. Then immediately after that, there's an indecision candle. Because you know what they're waiting? They're waiting for dumb people to make a decision so that they can do what they were going to do. So, and is it a surprise that the doji is green, that an indecision candle is green? Not a damn. They're trying to trick you into buying it. Because guess what? Earnings are coming out. I saw the earnings thing here now. Where did it go? Earnings normally come out in November. Why is it not showing on here? Okay, I saw it now. Earnings are coming out soon for Purple Group. Purple Group has a 31 August year end. JSE rule says 3 months after year end, you must publish. Purple Group is going to give us results in the next 3 weeks. We're going to get their final results. Guys, do not trade on earnings. Don't do it. It is so dangerous. Do not trade around earnings. Wait for the earnings. So what a lot of people do is they will speculate and they will say, hey, Purple Group's earnings are coming out, on the 10th of November. I'm going to buy because I expect the price to go up. That's dangerous. That is really dangerous. You have to think about what is, now Charles can say something in the results announcement, or the results could be horrible. Or you could think they're going to be horrible and sell all your Purple Group shares right now, and then they're not, and they blow the lights out. So you need to be listening, looking at what the price is saying. I am expecting price to come in this area. Between you and me, I could be wrong. I work on probabilities. But the chart is screaming at me that these guys are going for that area. So this is how you draw supply and demand. It is, I basically just draw demand. I love drawing demand because it's for my long-term investors. Okay. I need to go. Okay. Let's say Renigen, just for vibes, né? Just for vibes. I have a trend line here. So let me delete the trend line somewhere now. Before you guys think I'm crazy. So Renigen has gone from being an explorer where we had no proof what was in the ground to being a producer, which is a major step. And wouldn't we expect the share price to go up? And it didn't. It maybe hit a day or so. So the price was coming down. Okay, there's a big engulfing candle. So that candle is bigger than that candle, okay, much bigger, okay, and we take the body into consideration, okay, and the price keeps on coming down. The first thing we do is On the weekly with Renogen, it's very difficult because of this company's history. Can you see it ends there? Because of the history, it's very difficult to draw. And because of how it is always fundamentals in the back, how the company is evolving, price is the technical analysis almost becomes so irrelevant. It's very hard when a company is moving at the pace of Renogen. And for those who were in the previous meeting, I mean, I showed you in the previous webinar, I showed you how Renogen is moving from, planning to move from 2 million revenue to 250 million. And after that, 4 billion and 6 billion. And for a company that's moving like that in terms of growth, price history becomes almost irrelevant. But you can still use it if you want to. That's what I'm saying, is we can clearly see where the price got rejected. Okay, it's really, it got rejected there, it got rejected there, it never got back there again. We're on a downward trend right now. Just be very careful. If you draw a downtrend, this is something that I see some people do on their charts that is very dangerous. You can never. So this is resistance. Okay. And what did I say? If you draw resistance, it must be always be above the price. I've sometimes seen people draw me resistance like this. That is not resistance. It's not even support, because support is this way. That is support. So support goes from there to there. Okay. Resistance goes from there to there. It must be above the price. Support must be below the price. So never make the mistake on your chart of drawing something like this, because you're always going to make the wrong decision. You're going to make the opposite decision of what you should be making. This is not support. This is support. That is support. Because when the price gets there, it goes up. Okay? Because look at what is happening here. Is if you draw it wrong, the price is actually going down. Can you see red candles touch that line? And you want to be buying, not selling. Sellers need to sell. Okay? Look here. When you do this, green candles touch support. The buyers must touch support. The sellers on that side. Okay. So just be careful of that when you're drawing your charts, is do not draw your diagonal lines. Support below, resistance above. Okay, when you're drawing a diagonal line down. So Renogen is a bit difficult, but it's in a very good buy zone for me right now. I would say engulfing would probably happen. It happened there. Can you see? Going up, 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 and all the way going up. Boom. It goes down. And then it goes down only for 3 weeks, and it goes up again. But this candle would have been a clear indicator to me. I would never buy the stock at that price. Okay. I need to get to indicators, guys. I have to, because it's so important. Indicators are just maths. The thing is, it's just maths. Like I said on the very second slide, when I said, what is TA? I said it's maths. It's stats, statisticians, mathematicians, actuaries, etc., etc. They basically use historical data to give meaning. Okay. Now, I don't use a lot, and we all know the saying that the financial services providers have, that past performance is not an indicator of future performance. So that is exactly what technical analysis is trying to prove, is that past performance or past price action will determine where the future price is going to go in terms of market sentiment and market behavior. Because, guys, what I always say is the market is just humans. Whether those humans are in institutions, or whether they are retail investors, or whether they are a human who made a robot do something. The market is just humans. And what is the thing about humans? Humans are predictable. They really, really are predictable. They tend to do the same things over and over. And what you need to do is you need to learn how to capitalize on it. You need to learn how to use human behavior to make yourself rich. And that is the indicators that I'm going to show you now. So what a lot of people, why people criticize, especially long-term investors, criticize technical analysis is this factor here. By nature, they are lagging, which means they are backward looking, not forward looking. Okay? So they cannot accurately predict the future. The thing is, we don't want it to. Like me, I don't want it to accurately predict the future. I just need it to give me an indication if I'm making a right or a wrong decision. Okay? So we use it as a guidance for overall market sentiment. It's not going to tell us buy at R1.50, sell at R3. It's not going to do that. It is going to tell us this is a good area to buy. This is where a lot of the large players are buying. Every time the price gets here, it goes up. So this is a better area to buy at R1.50 than to buy at R3. Okay. The other thing it is if you are and a lot of you guys are young, okay, I need you to, even though you are building long-term wealth, there's something that will get me slaughtered by other investors, is you need to learn how to responsibly take profits. I always tell the story of when in 2020, December of 2020 or January of 2021, I bought Upstart at something like $30 or $40 a share. This thing in the span of a few weeks went up to $300 or something dollars, guys. And I bought a lot because I researched the company and I was actually so excited about the company. I bought the company on my FNB trader, where I actually pay commission because Easy Equities didn't have the stock as yet. And I can show you guys proof. I can screenshot my FNB Global Trader screenshot. I bought the stock. I did my research, found the stock, bought the stock, and I bought something like $3,000 or $4,000 or $5,000 worth of Upstart. And I said, I'm going to hold this company for 3 to 5 years because it's an amazing plan that they have. The stock went up 905, I don't even know how many percent in a matter of weeks. There was nothing supporting it in the fundamentals of the company. The company's loss-making. So who the hell is pushing the share price up? There's nothing underlying the fundamentals. And we're going to get to the RSI. I'm going to show you why I sold Upstart. I sold my Upstart, took my profits, moved my money to Easy Equities, and then I bought it back at around, so I took my profits at around 300 and something. I didn't go all the way up to $400. I took my profits because the chart said, hell, what is going on here? And I made a ton of money just by the fundamentals, and the price doesn't make any sense. This thing is going to come, it's going to crash hard. And Upstart is down to below where I bought it initially, guys. So I bought back at where I initially bought. So now I'm down, I think 20-30%. But am I sad? No. I made like a few $100K profit. I bought back the same amount of shares, distributed to my other dividend paying shares, etc., paid my tax because it's a short term. Obviously, Sarah's going to say this was not a long term investor. You're a speculator. But when I went in, I was a long term investor. but I had to sell. I had to take profit because this chart was screaming at me that sell this thing. So because if you are, especially if you are young, learn the skill because it is going to fuel your portfolio. Selling Bitcoin I sold Bitcoin at my Bitcoin at 60K. I started buying back my Bitcoin at 23K. Am I not a believer in Bitcoin? Hell no, I'm a believer. But the chart said sell it. And the thing with crypto is I'm a long-term investor. I can buy it back. I still have 20, 30 years to go. So I can buy it back, and I didn't sell all of my crypto. I was like, let me sell a lot of it and buy it back. And me and Sky were charting Bitcoin, and our entry was literally, I think, between 10 and 15K, we said. But at 23K, I was like, guys, I'm going to start buying my Bitcoin back that I sold at 65,000. And that is responsibly taking profits, is do not be afraid to take profits. If you believe in something long-term, but the chart is screaming at you, not the chart is neither here nor there, or you panicking, or nothing is wrong with the company, blah, blah, blah. You have to be able to combine technicals and fundamentals and say, this thing doesn't make sense. So we're going to move to the charts for this, but there's only two indicators that I use. I only use the EMA, which is the exponential moving average. I'll explain it to you now. And I use the relative strength index. The only two indicators that I combine with my trend lines. And then I make a decision. That's it. Nothing more complicated than that. I don't use anything else, I promise, okay? If you see anything else on my charts, I'm trading. I'm not investing. For long-term investing, only my exponential moving average and my relative strength index. The 20, 50, and the 200, those are days, okay? So it's the 20-day EMA, 50-day EMA, 200-day EMA, okay? And the relative strength index, people just for short call it the RSI. I put this huge. Why do I use moving averages? Because price has memory. Price always wants to return to its memory price. The price that it has in its memory is the strongest price, is its average price. And it's always going to try to go there. And I'm going to prove it to you. It does everything in its power to return to its memory, okay? The relative strength index, I don't want you to know how this is calculated. It is completely irrelevant, okay? All you need to know is the relative, look at the word, relative strength. Tells you how strong the price is or how weak the price is, okay? So it's relative strength. It combines historical, always know, technical analysis has nothing else to use but historical, okay? It combines historical upwards and downwards price movements to determine if a stock is overbought or oversold. I'm going to show it to you on a chart and you're going to understand it perfectly, trust me. It is a number between 0 and 100, and we're going to see now. Those things that I deleted earlier was my RSI. If it's overbought, it means that the RSI is over 70. I will sometimes stretch it to 80, okay? And I'm going to tell you when. Oversold, it means it is under 30. Overbought me, let's take this. Let's take it to the charts. Let's take it to the charts. Okay, let's use Alibaba. Let's go down our list. Okay, now I have given you indicators. So remember, here I said, okay, here you can either see, I clicked on it, but I never showed you. Some people like to see it as a line. It means nothing to me, guys. I love my candles. My phone thinks I'm talking to it. So You can either see candles, or you can see hollow candles, or you can see bars. Like some people like to see it like this. I don't. I am a candlestick lover. Okay, so you're always going to see my chart looking like that. Okay, am I on the weekly for Alibaba? Yes, I am. Okay, I'm on the weekly for Alibaba. Now we want to put in our indicators, and beautiful, there's a word next to it called indicators. And what did I say? We only use two indicators. We use the exponential moving average, and we use the relative strength index. We click on it, boom. We're not even going to, you can now see, because this is Sol's thing, it's already in there, but please type in exponential moving average, exponential. So can you see the moving average exponential? Okay. Okay. I added it how many times now? Sorry, guys, I just need to add it twice. I added it too many times. So can you now see there is an it says EMA 9 close, EMA 9 close. Okay. Now, what you need to do is, this is very important. You can see a purple line in here because these two are now identical. I need you to, when you're on indicators and you're on exponential moving average, click on it twice because you need two lines. Okay. You need a recent line and an older line. So when I say 20, 50, and 200. So we are going to use 50, the most popular, the most commonly used is 50 and 200. Okay, you can play with it a little bit, but you're not going to see a huge difference. It's not going to affect your decision making. Now, how do we change this purple line? You stand on the word, go to everywhere, it says settings. Okay, what color do you want your line to be? It's purple. Okay, let's just make it a little bit thicker. I like thick lines. Okay, but you have to go to inputs, because right now this EMA is a 9-day EMA, a 9-week actually. If we need to change it to 50, okay, and we say okay, that's the only thing I want you to do, is change it to 50. So can you see there's the 50 line? Okay, let's see if you change it to 20, it's going to come much closer. That's the only thing I need you to change. 20, you're going to see it's going to come much closer. A lot of people like 20, some people like 50. I promise it's not going to affect your decision making. Some people even go as far as using the middle ground to be more accurate. It hasn't affected my decision making ever. Now let's stand on the second one. We need the 200. Okay, what color do we want our 200 to be? Can't be purple too. Let's use this. I always like blue there. Okay, there we go. So, but we haven't changed the input. We have to say 200. Now, this is the beautiful thing about charting, guys. If you are on the weekly year at the top, this is a 200 week moving average, the blue, and this is a 250 week. Okay, if you change it to the daily, okay, let's go to the daily. It's just I lock in and I move my chart up. I literally click my mouse in, and now it doesn't look so nice for me, so I'm dragging it up, okay, so that I can get a bit more data. I'm just don't want you guys to feel lost if I'm doing something funny on the charts and you're like, how did she do that? Okay, so Alibaba has been in free fall. Can we see that? We can even go, let's go to the weekly because it's going to be easier to see on the chart. Let's go to the weekly on Alibaba. See ya. Alibaba has been, so now you can also see, because this is the 200 week. Before this point, there wasn't 200 weeks of Alibaba. It wasn't listed 200 weeks because that's a very long time. Okay, so if you see a line begins like somewhere in the middle, then you must know before that, this is when Alibaba was there on the stock exchange for the first time for 200 weeks. Okay, now let me first explain the moving averages. When I say price has memory, and it will always try to return to its memory price. Okay? But we have to now also remember, and remember we are long-term investors. Jack Ma is a huge critic of the Chinese government, and they have been blasting his companies. Okay? So again, fundamentals in the back. Let's look at what the chart says. Okay. Let's just look at moving averages. So at any point in time, we're going to work with the purple line. Okay. Purple is 50-day. You will also see your prices in purple. So it's very nice to see which line, even you won't get confused. Now, people often ask me, so which is the stronger line? Like, I always say the strongest price is the price that has been around for the longest. And that's your 200-day. That's your strongest price. It's stronger than 50. But because traders want to, obviously, you get swing traders. Remember, guys, there's three classes of investors. You get day traders, okay? Those are the people who sit with the lots of screens and trade every single day, on the minute, on the second, on the 15-second, on the 25-minute, on the 1 hour. They sit the whole day and trade. Those are our day traders. Okay. Then we have swing traders. Swing traders are the people who love this line, the purple line, because the day traders would actually make this probably 20 days, because for them, day traders don't even trade on 20. They don't even care about moving averages. Sometimes I promise you, some of them literally don't care about it. But if they do, they will use a very short moving average. They will use like 15 days or 15 minutes or 15 seconds. That will be their line. It will be 15 or 20 or something, because they are fast. Swing traders. And I made this mistake in, I think, 2020. I followed someone and I subscribed, and I assumed the person was a long-term investor. And then when I saw their trading, and I think I paid like $10 a month or something. It's like, this person is a swing trader and I'm a long-term investor. So I have no business being in this group. Like, what the hell am I doing here? So be very careful who you take advice from. If you are a long-term investor and you're taking advice from a swing trader, you are going to make the wrong decision. Okay? Because swing traders want to make money between literally, let's say, a week to 6 weeks. Then they want to be out of a trade. And they normally use the 50. Okay? Because that's the time that they want to be in the trade. So the 50 is very important to them. We want to be in the trade for as long as possible as long-term investors. Okay? We want to be in a trade for as long as possible. So the 200 for us is very important. Okay, we use it. We don't ignore the 50. The 50 is, if it comes to the 50, we're like, this is a good sign that it's going to the 200. Okay, but now I want you to look at this. And we're using the weekly, but we're going to go to the daily just now, because Alibaba is so all over the place. I can also use their other charts. But now your 50 and your 200, when do you buy and when do you not buy? My golden rule is, I will never buy a share, ever. Outside of my fundamentals, if I'm just looking at a chart, I will not buy a share if the price, the current price, is above memory. Hell to the no. Because it's going to try to return to memory. Why would you pay that price if it's going to go back to memory? I just won't buy a share where the current price is above the memory price. I won't. Because you're buying high. Price is going to try to go back there. And what did it do? It did. So anybody who bought Alibaba there at 315, it's now at 73. Memory, at that point in time, the weak memory was 239, but the strong memory would have saved them 315. Sorry, I always need my calculator. The strong memory would have saved them $135 because they would have been like, no. A long-term investor would have been like, no, the share price is going to try to return to that price. I'm not buying it. And what did it do? Now, I'm not going to cover this. We have the golden cross and the death cross when the 50 and the 200, when they cross and blah, blah, blah. That's for traders. It's not for us. The only thing that we look at now is we're standing here on the 10th of October, 15 October, wherever we are now. Okay. And what is it telling us? What's the chart telling us? That Alibaba is $73. Its short-term memory is 112. Its long-term memory is 158. Would I consider buying Alibaba based on the EMAs? Hell yes. It is now based on my trend lines and based on the next indicator that I'm going to add and my knowledge of the company always. So based on my trend lines, I'm not going to add trend lines now. Based on, because we're busy with indicators, I'm going to make the chart very messy. But based on what we start talking about now, indicators, Alibaba is a yes over here. Okay, because memory is at 112 and 158. The weak memory, the swing traders memory, the long-term investors memory is there. Okay, now let's add our, so this is what I wanted to tell you. If you don't have a pro subscription like me, okay, because remember I said I do trade. If you don't have a pro subscription, the only problem, the only limitation is, and it should not matter to you guys, is you can only add 3 indicators on TradingView. So I could add 5 different EMAs here. I could add 20, so many indicators. You can't. But what am I telling you? You only need 3. You need a 50. This is your first indicator. That's your second indicator. Now we are going to add your next indicator, the relative. You type it in, strength index. Okay. There we go. And in. Okay. Now I am very pedantic. This thing is at the bottom. Most traders love it at the bottom. Not me, because my RSI is very important to me. I literally clicked on that arrow there. Sorry, man. I keep clicking on this thing. You just click it and there's an arrow and it throws it to the top or to the bottom. Né? So I moved it to the top. Now you're like, so what on earth is this thing? Okay. Firstly, what did I say about the RSI? The RSI is a number between 0 and 100. Okay. It tells you if a stock is overbought or oversold. Now, what is the meaning of overbought and oversold? I'm going to edit as I'm talking, okay? So I'm going to stand on this and I'm going to go right click and I'm going to say settings, okay? I'm going to do it as I'm talking. I am going to, so guys, do not, if you want to change the inputs, the only thing I would say is change the RSI length to 21. That's what is the standard, okay? That's the only thing. On settings, we are just working on the style here. Now look at all these lines, okay? I need you must have the RSI, okay? You don't have a choice. You must have the RSI. The RSI is this actual purple line going here. Do you want your line purple? It is completely up to you. I'm making mine black today. Okay. I'm going to go, sorry. I just want to show you guys as it comes in. The RSI-based MSA, I want you to take it out, okay? The upper band, I want you to please make it, the upper band means a stock is oversold. I want you to make it red, always, okay? Did it go red? Okay, sorry, let me just see. Oh, it's not that one. Sorry, you need to take that out. The RSI upper band, not the Bollinger upper hand. Ignore that. Please, guys, please, please, please. Untick these 3 boxes. Your RSI upper band, make it red for me. Big, so that you see it's red. I'm going to explain to you why it's red. The middle, I don't give a crap about. The bottom, please make it blue. Always. My beginners, please do this. I promise it's going to make sense. So what is this telling me? The RSI of a company. If an RSI goes above 70, we say the stock is hot, drop it. People are paying too much for the share, too fast, and it's not backed up by anything. Drop the stock, it is hot. And what do most people do in the market when a stock is hot? They FOMO. Look at what happened when the RSI touched 72 of Alibaba. I would have dropped it. A lot of people bought it over there. The RSI was screaming at you, drop the stock. The next thing is they were pretending to go up, and then you had engulfing. They were fooling you into buying Alibaba over there. Now let's look at where we currently are. I always like to show you guys examples. If the stock is, if it touches the blue, it says this stock is cold. It's oversold. People are selling this stock for no reason. Pick it up. That's what the RSI says in plain English. Not what now the traders are talking. I'm talking to you like a normal person. If the stock is cold, pick it up. If the stock is hot, drop it or take profits. Just leave your original investment in there. You can stretch the RSI. If you say 70 and 30 is not strict enough for you, then you can move that to 80 and you can move that to 20. Then you can be even more extreme. Then you can see, yeah, Alibaba touched 80. 80, guys. 80. That's madness. It's telling you the stock is going down. Okay? So I only do the extremes for forex trading. I promise you, for equities, I'm very fine, because equity investors are more predictable than forex and crypto investors. So the reason that I stretch my RSI for forex is because I need them to show their hand as clear as daylight. Because 80 is like, you have gone bonkers. You are overpaying for this thing. So in forex, I need them, because it's more volatile and there's a lot more people in it, I need to stretch my RSI so that I can almost say with certainty, this thing hits 80, I'm selling. If this thing hits 20, I'm buying. Okay, so it's almost with certainty. But remember, we combine the RSI. So the RSI is currently at 37, not far from 30. Your two moving averages, short-term and long-term memory, are above the current price, which means it's going to try to go up. I would wait for this thing to come down, and then potentially I would want them to show me their hand with engulfing. And that is how you use technical analysis as a long-term investor. So your chart could look something like this. Okay, let's use this. We are on the weekly. We are on Alibaba. Okay, we can check. Are they, so let's say this is the current price. Okay, we can already see where the current price is. It bounced off there twice. Okay, let's go into history and see, does price bounce there historically? Okay, what you can do is, once you've marked it, remember I say you start on the weekly. Where do you make your decision? You make your decision on the daily. You have to switch, fam. You can do all your drawings, everything on the weekly. But after you've done it, I need you to switch to the daily. And now we drew this line on the weekly, né? Now let's see on the daily, what happens on that support line. Okay, go, we can see. Okay, so we are going to go so far, but let's look at recent. The recent, it's how many times did it touch that line? Oh, it's because my price is too small. Sorry, guys, I'm just moving it a little bit. There. Okay, so on the current, you can see it's touched, almost touched. Okay. We can see on the daily RSI, when it touched that line, the RSI moved to 27, which was a clear buy signal. On the daily, the RSI is a little bit lower, but it hasn't touched 30 yet, but it is on a sort of a support line. Okay. So Alibaba is on a downtrend. You need to be very patient and you need to be averaging in if you are looking at a stock like Alibaba, because it is literally on a downtrend. And how would you draw another trend line? So this is support. Remember, if you want to buy, if you want to see like how long is, you can draw support. So this is resistance. It is every time it knocks that line, it rejects it. Okay, 3 times it's done it already. When it knocks that line, it resists it. So you can make your buy decision based on this support line and basically when price gets rejected and it goes down. So you have 2 lines to make a good decision on Alibaba. Combine it with the RSI. Guys, things are never going to be perfect. But in the back of our heads, we know these businesses. We know their financials. I've shown you how to look at their financials. I've shown you how to study the company. I've shown you, how to look at the news, etc., etc. Combine the two, you become powerful in investing. And you would never have bought Alibaba at that high price, ever. Because you would have come here and you would have said, hells to the nose. My RSI is telling me no. My both my EMAs are screaming at me, don't do this. So the other thing people are trying to do right now is, let me show you guys. What people are trying to do is, when we call it catch a falling knife. Okay. So if we do that, people have been trying to spot Alibaba's bottom for forever. So look at all these people. It keeps getting rejected at that line, at the black line. Make that line a very it's fine. Let me not be so pedantic. I am very pedantic when it comes to my charting. Okay, so look at all these people trying to catch a falling knife. People keep getting fooled at that line. It broke through, and you can draw different lines to make different decisions, guys. But this was literally catching a falling knife. I love Alibaba, but I have no shares in Alibaba at the moment because I've owned Alibaba many, many years ago, and I sold my shares when the price went crazy, and I'm gonna buy Alibaba back. Maybe around 60, I think. I'm still busy with my charting, but I'm definitely buying Alibaba back. This is a beautiful company. But China just needs to slow down. I took a decision in 2021 to sell all my Chinese stocks. when China was doing all those crazy things, I took a decision to sell all my China stocks. We haven't even touched on Tesla. Let's look at Tesla quickly. So now everything has been, that's the nice thing there about, oh, the one thing I'm not showing you guys is, I'm so terrible, is, do you see these E's over here at the bottom? That is when they release earnings. That's very important for investors, for long-term investors. We have to check on the company every quarter. Or so our US stocks, we check every quarter. You can see every quarter results come out. If you look at our South African stocks, you will see it's every half year earnings comes out. You go back in the day for Discovery, if you see a D, dividends was paid on that day, okay? So it's earnings, dividends, earnings. Discovery has not paid us a dividend since 2020. I'm so tired of Discovery, but I'm waiting for Discovery to actually go under. I said 98 was my entry price, but yeah, 98 was my entry price as my potential entry for Discovery, because I'm just greedy. I want to buy it as low as possible. So the nice thing is, once you have put your indicators in on one chart, can you guys now see that it comes to all my charts? My RSI is on every chart. My 200 and my 50 is on every chart. So you do it once, okay? Your drawings doesn't go from chart to chart. Only your indicators goes from chart to chart, because it makes no sense. You can't have a line going from Discovery to PPE, because it's completely different prices, okay? How do you set a stop loss? I do not set stop losses. I do not set stop losses in long-term investing. I sell a stock when the fundamentals are gone. You are talking about traders set stop losses. Investors don't set stop losses. Investors sell a stock when the fundamentals are gone. You are trading if you are setting stop losses, because I have stocks that are 40% down and I am as excited and crazy about them. I would never sell them unless the fundamentals are gone. All I'm doing is using the charts to tell me when to buy more, because I'm 40% down. I better well put, I think the stock I'm largest down on is Gevo. I'm 40% down on Gevo, and I'm fine, because Gevo is a beautiful company and I'm so excited. So only traders use stop losses. Investors do not use stop losses. I just wanted to quickly show you on Tesla, there is a S. So if you see a S, what does it mean? Stock split, okay? Which means Tesla had a stock split. If you don't know how stock splits work, I think I did an article on FinMeUp. I'm not sure. But stock splits is really just Tesla making the share price smaller. Remember, I spoke about Tesla being at $1,200. Tesla did a 3-for-1 or a 5-for-1 stock split. So it just meant for every one stock you had, you get like 5 stocks, okay, in a stock split. So that is really, I think I've covered everything. I think I've covered everything I wanted to cover. Yeah,